Good morning, everybody. Welcome to Capital Preservation. This is PAX coming to you live with my co-host Penny Blaine, and we're coming to you live from Place Your Trades Network. Today we are talking about capital preservation in a market. Last couple of weeks we've talked about capital preservation in volatile markets. Today we're going to talk about capital preservation in thin and chop markets and whippy markets like we've had. Today's podcast is brought to you by Crudele, which has built a custom app dedicated to trading event contracts. This is what we all use at Place Your Trades Network. Like the link, use the link in the chat to start using the Crudele web app for free. And it's really kind of cool and it's easy to use. And it's free. And you can follow along and make your own picks. Make sure you like and subscribe to our channel and set notifications so that you can never miss a new podcast, either mine, Penny's, or anybody else's in our network. It's really fun, this little community of traders that we are kind of developing and things, or, meeting and getting to know one another is really kind of a neat thing. We all have different perspectives and have different experiences. And it's been fun for me to get to know, especially to get to know Penny and to be, I love that she tweets about some of our conversations that we have in the morning. But more importantly, I love watching and being a small part of the progress that you've made as a trader. It's exciting, Penny, when you struggle and things are kind of, and you're trying to learn and you're putting all of the pieces of the puzzle together, your mindset. For me, there's three parts of my trading process. It's my mindset, my execution, and my technical awareness, not analysis, technical awareness. And when those three things start to come together, it's exciting. And nothing but blue skies ahead, and things are coming together for you. And I can see the excitement in your face when I watched the podcast yesterday, and I also can see and feel the energy in your tweets. And I cannot tell you how awesome that is. So how was your week this week?
Pax, that was so nice of you to say. I really appreciate it. And I'm so glad we're friends. And, I always knew we were good friends, but the fact that we're twins today and we didn't plan it, we really got a thing going here, I think. Yeah. Thank you so much for saying that. I actually this morning was going over my, so I never, ever look at my overall P&L because it is like, I don't want to know. I don't want to see. But I've put together 2 weeks of being consistently green, which is amazing and also a little bit scary, if I'm being honest, just because I've been there before and I had a huge blow up after putting together about 3 weeks of consistent green. So I'm a little nervous about that. But anyway, I looked at my, thank you, husband. Here's my husband with my coffee, which is so nice of him. So I was looking at my cumulative P&L for the month this week, and it looked very much like an ABCD pattern, which is honestly my favorite pattern. And like the last 2 weeks, there's been just like such an uptrend. And then I decided to look at my cumulative P&L, and it like legitimately looks like there's a breakout. The typical traders thing, it's like up and then like down and then just like bump, and then like a little up, down, and now it's like finally does look like maybe I got it. And if I really did have my trading click and can actually like sustain this, then it has been worth all the emotional turmoil that I have been going through for the past 2 years. And I'm so excited, but then there's like, I'm nervous as well. So
that right there, I think is one of the most important statements that a trader can ever make, is that the emotional turmoil and everything that you've been through for the last 2 years is worth it. The struggle is worth it. When you're working on putting all that stuff together, sometimes it feels like you're pulling a train uphill by your teeth by yourself, or pushing it uphill by yourself. But when you get that train to the top of the hill and it starts to rock back and forth and gather its own momentum, it's exciting. And one of the things yesterday when we were talking that you said was, you feel like you didn't say it this way, but I took it that way, is that, you feel like you're on a hot streak, right? And you don't want it to end, and it's happened before. And the way you described it beautifully right now is not that. We don't. This is not gambling, and this is a business, so we don't go on hot streaks. Now, there are some times where I'm going to be, more on top of my game, more in possession of myself, and I see the market really clearly, right? And I'm going to take advantage of those days. Last week, early on in this week, we had really, really good trading days, at least according to my process, that I was able to capitalize on and take advantage of. Wednesday, all of a sudden, the market got thin and whippy and choppy, and we didn't break out of the opening range until, an hour and a half into the day. Yesterday, it wasn't until 11 o'clock before Central Time, before the market decided what direction it was going to head. It was back and forth. Those days, I've got to protect myself, and like we talked about yesterday is how do we do that? This is not of course there's times, like I said, where we see things clearer, and we have to really kind of capitalize on that. But, when there's no streaky here, it's every morning, my goal is to protect the beginning balance of my statement. So if my statement says I've got $10,000 in it, then I don't want it to be 9,000. I don't want to lose money. I don't lose money. I want to spend money like any other business in order to make money. So I'll spend, when I get long or short out of the opening range, according to my process, I'm going to manage my expenses tightly until the market tells me whether or not I'm on the right side of it. So when I have some profit into it, and this is how we protect ourselves, right? As you continue to move from one trade to the next, and you protect the beginning balance of your statement, then you've got some profit locked in, and you protect that. That's your new balance. You've been posting your P&L. So if you've got $500 into a trade, that's the 500 that you're going to try to use to make a little more, or that's the 500 you're going to protect. Then you go on to the next trade, protecting that nickel that you just locked in. So in that sense, you continue to protect yourself all the way along. So, when we have days like Wednesday or Thursday and they're tougher to trade, it's easier for you to sit and be more patient and wait for that market to kind of unfold and then capitalize on that. Another thing too, you mentioned about looking at your P&L. I don't look at my P&L. I don't look at my statements. I can't. That's the benefit of having a wife and my partner in life and business who had worked on the trading floor for 18 years. So my wife looks at my statements. My wife manages my accounts. I'm mindful of my P&L. I know, roughly always where I'm at, but I don't want to see, I made X amount, because I'm going to start to feel a little too confident. I'm going to start to feel a little too comfortable. So, my wife will manage that. So I don't feel either too confident or too low if I have a rough time. Yeah, Anthony, we've had this conversation. Anthony loves to look. He looks at his all the time. I can't. If I look at my statement, and if I know where my money is, in times where markets get a little rougher to trade, I might be more inclined to start making trading decisions based off of my P&L. Oh, I'm up $1,000 here. I've got to cover. It's all about price. It's all about price action. It's all about price activity and where we're trading. It's not I've got to cover because I'm up X amount. I'm going to we're above this price, and I'm going to let the market go to the next price. Just like you said, A, B, C patterns. The market moves one rung to the next. I'm sorry, again, talking too much like I did the last couple of weeks. But this is not gambling. It's a business like any other. And every day is uncertain. Just as if I owned a pizzeria. I don't know how many pizzas I'm going to sell, but I know I've got confidence in myself that I'm going to sell pizzas. Just every morning I come down and I'm confident, carefree, fearless, and focused. And in my trading group, in the PAX group, that becomes kind of a cliche. I'm CCFF. But every morning I know I'm confident. I'm going to make money every day. I never come down to the screen and say, God, I hope I make money. I know I'm going to make money. Do I every day? No, of course not. It's not possible. But I believe I'm going to. And I know that if we have trading like Wednesday and yesterday, Thursday, that are difficult to trade according to my process, then I'm going to shut it down and I'm going to protect myself. That's it. So after 4 trades, if I get stopped out for a scratch or a small expense on a trade that I put on, like, sell 98 halves yesterday, the market goes 97 offer, I put in a scratch stop. It's either going to go or it doesn't. If it comes back up to the opening range, that's one stop. If I get stopped out 4 times in a row, I take it easy and I wait for another action area in my plan to initiate a trade from. Too much talking again. Sorry.
I have a comment on that too. That I feel like is a solid representation of that I am feeling confident. So when I started trading 2 years ago, I took my own personal savings from my job that I worked. I had my own savings account. I am married, but this was not a joint savings account. This was my own savings account. I put the entire thing in my trading account. It was $25,000 so that I could get above PDT. And I have been on this journey alone, essentially. Like my husband is like, I wish you all the best. This is like your thing. This is your money. He's never put any like pressure on me. He's never made me feel badly about anything. And, but it's been a big burden to carry because we don't really talk about it. And last year on my birthday, I lost like $3,500, which is that's a massive piece of that account that I lost. And it's been up and down. And it's been super hard on me emotionally. And last night, we went to dinner, just the two of us, and I felt confident enough in what I'm doing now to tell him my overall P&L and how much money I've lost since the beginning, which really felt like taking a nice step into ownership of like, this happened and now we're here. And I think that like, I'm going to be okay. And there was like some real power in that. So, anyway, I just wanted to share that story. It's,
that really is it's so interesting. When you feel like you're, again, pushing the train uphill by yourself, and you are now that you've got the train up at the top of the hill and it's about to start gathering a ton of steam, or it already is gathering steam, you're already doing it. And now, it's easier to share your struggles because you know that you're moving past them, right? And some we overcome, some we don't. I'll have a tendency to overtrade my entire career. I overtraded on Wednesday a little bit. That's just, you don't overcome everything. You just have to kind of work around it, protect yourself from it. And as you learn how to do that, it's easier to share that with your spouse and your partner and people that are important to you. Jimmy said the key is to show your wife only the bad days, so that I used to do that. I used to do that with my ex-wife, and maybe that's why she's my ex-wife.
Well, I was talking to Anthony yesterday, and I do want to I appreciate you so much teaching me your system. I've implemented that so much. I love it because I finally, before I started talking to you, figured out exactly what size I'm allowed to take on every trade, which stupidly I did not understand for a very, very long time. I did not understand position sizing. And now that I've been working with you, I understand exactly what the risk is on every single trade that I take, which doesn't make me afraid anymore. And not being afraid is like, what a new lease on life.
Fearless.
But
yes,
these event contracts, which we do need to get to, have been a massive, massive game changer for my own trading, because it gives me it, like literally breaking it down to, are we going to close higher or lower? Putting it in that kind of black and white system for me has eliminated all the noise. I was doing the stupidest shit before of like, oh, maybe this is like a flag, or I like loved the EMAs, or, we're going to I was doing like the stupidest shit. And after trading these event contracts, I've really been able to focus in my mind of like, is this, I'm an options trader, but like, is this a calls day or a puts day? And that's all I'm doing. And I'm so thankful to these event contracts for really solidifying that for me. what a gift to me. So
no doubt. Isn't that crazy? You know, the event contracts are really good for that too, is to help you overcome your fear. The markets can't hurt you. So the third part of my morning checklist and my daily checklist is, you know, am I fearless? Confident, carefree, fearless. Markets can't hurt me. Nothing can hurt me. I'm not afraid to lose money. I'm not. Well, I don't want to lose money. I'm not afraid of it because I've been broke. I've made millions and millions of dollars, and I had to start all over again. So if that's the worst thing that's going to happen to me, and that was, you know, before everybody starts tweeting me, that was 10 years ago. You know, I've been since rebuilding. You know, and anyway, you know, if that's the worst thing that's going to happen to me in this business, and I really have nothing to fear because my wife stayed with me and she loves me. My children love me. And I've been able to rebuild because my wife believed in me. You know, when I didn't believe myself, she believed in me, and that helped me, you know, tremendously to begin to learn how to trust myself again as a man and as a trader. You know, these event contracts are a great. Candy calls them a gateway drug, and that cracks me up every time he says that. But I think that they're a great way of. My sons are both using these. Both of them have downloaded the app. Well, my son is 17, so he's using mine. But my 23-year-old has downloaded the app, and they're using these event contracts to learn how to look at the market, to learn how to see the market, and to make a little bit of money in them while managing limited risk and opening themselves up to the good things that the market has for us. The unlimited upside. Now there is a limited upside here, unless of course you're going to trade huge, which you can. You know, you can size up in this stuff. But the simplicity of these contracts and the simplicity of the Trade app is conducive to learning how the markets work. A lot of people, and I'm sure I'm going to get piss off a lot of people when I say this, but futures run the world because they are tethered to something real, which is expiration prices. Leo Melamed, the father of futures trading, was one of my heroes. Every time I see Leo or saw Leo, every time I saw him, I thank him. Without Leo Melamed, none of us would be here. None of us would be here. We wouldn't be talking. He's the father of futures trading. Google him, look him up, Holocaust survivor. And anyway, when he brought futures into the modern age after Bretton Woods in the 70s, early 70s, with currency trading, it was important to him that it be tied to something real, and that was expiration prices. Those expiration prices are the biggest opening range we have, as you and I have talked about in separate or in either in past conversations or in this podcast. That trails all the way from expiration in June or in September, trails all the way into today's event contracts. You know, this is what it's all based on. Do we get long? Do we get short? Do we close above 37? 37 even, or do we close below 36.55? Those things are tied all the way back to expiration. Those things are tied every single day back to the opening range. I don't like making my event picks until after I know where we're going to open. I don't like trading until I know where we're going to open. I don't trade outside of regular trading hours. Very, very, very rarely will I ever initiate a trade overnight. First trading day of the year, first trading day of the new contract, those sorts of things, yes, but never, ever at any other time will I trade outside of regular trading hours. Once the market opens, which is the smaller of expiration open, you know, now I've got an idea as where we're going to go. So with that, how about we make some picks?
Let's do the opposite. Mark, let's make some picks. Let's go ahead and pre-decide. I'd love to make some picks with you. You know, we've been on a All right.
Say that again.
Oh, I said we've been on a roll with our picks. My account balance is up here. Let's take a look. Look at that. We're up. We're up on
Awesome
on the balance here. So our picks are popping. Anthony, I'm sure is going to put in the chat that he helped me with a play yesterday. So thank you, Anthony. You've also contributed here to my overall P&L.
Yeah. That's funny. Anthony had a great comment right now. We thought the micros would be the entry product, but since we've gotten so volatile that these event contracts are far better. I 100% agree with that. You know, and Anthony and I have had this conversation before about micros. You know, I don't believe that the CME invented micros for retail traders. I do believe that CME came up with these for retail traders. Okay, so let's look at the S&P.
Let's do it.
We have had, since we started talking, we traded, since you and I started talking before the podcast started, we were trading at 36.40 in the 36.40.50 range. I had, when I texted out, when I emailed out my trading plan this morning to my group, I told everybody that we're going to open up at that very important price level that we have been talking about, which is 36.63. And here we are. We're just above it. We're trading. Remember, we talked about 37.26 last 3 weeks, 36.63. Underneath that, down to 36.06, that sort of thing. Above it, you know, we continue to rally. Below it, we continue to break. So the market will come to these important prices and they'll like a magnet, and they'll gravitate to them. So now that we're churning this 36.63 area, I want to see where the market is going to open before we decide where we're going to go. Now, Anthony, yeah, of course, got to be long above 36.5. We've got to take the yeses, but that's going to be what, you know, a little bit price prohibitive. The yes above, what's the strike for 37 even is going to be $6. I would buy that, $20 worth. Now, I know a lot of people are bared up today, and we're going to go lower. We're going to zero on a Friday. I don't think that's going to be the case, but we certainly can go lower. And I would hedge that with
Okey-doke. Doke.
Did you get them?
I sure did.
All right. Like Anne-Marie has been talking about a straddle-like process, you know, and taking the nose to be able to adjust that. But we talked about maybe keeping it simple and not doing that yet. But wait for what I wanted to say about that is let the market open. And the only reason I'm taking the yes above at 37 even is because we're above 36.63. But let the market open. If we get below that level, we get below the opening range, we get below 36.63, then trade out of those yeses. Don't let it expire for that.
All right.
Let's go to the NAV. See what the snazzy nazzy's doing. Oof. Okay. Let me pull mine up too. It's easier. It's always easier when we're talking for me to look at the screens than it is for me to look at my phone because my eyes are so old. All right. We're trading at 11,045. All right. So we are below some very important levels in the NASDAQ. So, the yeses above 11,100. I would take those. Try to get them for a better price. I would take those for another $20. Yeah, that's good. $7.75. That's it. That's a nice, easy play, I think. You know, do we close above that? I think so. The big level that's going to pull the NASDAQ up will be 11,130 to 40, like a magnet. Just kind of pull it up. Now, if the market does turn, you know, and again, the opening range and we stay below those prices, then trade out of it. What about crude? Have you been doing any crude?
No.
Crude at all?
No.
Crude.
I don't know if I've graduated to crude yet, but I'm learning. I'm breaking out. I could be trading crude by next week. I could be a crude expert. We don't know.
It's funny that you say that you graduate. Sometimes I feel like I regress to go and trade crude. Oh, here we go. I gotta trade crude again. Whenever I start doing that, I feel like I'm getting a little bit too confident, you know, a little cocky, a little arrogant. And when I get a little cocky, a little arrogant, I'm not in so much self-possession of myself. You know, bad things usually happen when that happens. 85.28. So we are trading in between two important levels, which is going to be 84.90, 84.48 and 85.94. Those are the two most recent expiration prices. So I would take the yeses of, you know what? No, man alive. Oh, I would certainly take the yeses above 90, above 85, but that's for $9.50. Hey, you know, it's a little kind of low-hanging fruit, I think.
All right.
I'm a little bullish on this Friday. I'm
feeling it. I'm feeling it.
Yeah, there's there's an old trader saying that I learned on the floor years and years ago, and I tweet it out all the time. Don't fade late day Friday strength. Don't fade late day Friday strength in a bull market. Don't fade late day Friday weakness either. So if we start opening up again, be underneath the opening range, and we start taking out these lower levels, we got to trade out of it. So don't fade what the market is doing late in the day. It'll continue to expand its range.
Got it. I
wish we had the ability to be able to trade like the 30-year bond or the 10-year note. The reason I say that is because where the 30-year bonds are at levels that have been important since 1993, and then again in 2008, the 119, 118 handles, the 10-year notes are just super weak. And remember, the bonds and the notes trade inverse to interest rates. So the higher the interest rates go, the lower the bonds go. And that's how they're trading it now.
Pax, we have time. We have time for one more pick. It's 9:26. Market's about to open. Let's look at copper for me.
Yeah, let's just going to say that. Let's stay away from gold. Silver and gold have been a shitty trade. Copper pulled up those strikes. Copper has been kind of bouncing, right? So I don't know. What are you thinking with copper? You've been paying more attention to it than I have.
I don't know. I mean, everything I've ever known about trading is basically out the window now, and I'm just doing what your system is. So I don't know. I have no clue.
All right. So copper, we're trading at where? I would take the yeses. Oh, that's easy. All right, go back to the strike price. The strike. I was going to say take the yeses of I'll take the yes on. And it's about even money for even. I would take the yeses on 45. At 45.
Ooh, all right.
But
I
small,
mean, should we take
small? Do it.
All right.
Small. Do it just $5. See where that's going to go.
All right. Guys, the market's about to open. Happy Friday. I wanted to ask for a couple of favors. First, if you could go down and hit the like on this video, we would really, really appreciate it. We would also love it so much if you would subscribe to the channel. And I want to give a massive shout out to Anne-Marie. Massive shout out. She has been doing amazing work on Twitter explaining these event contracts. So if you don't follow her, I absolutely suggest you do that. She's explaining what she's doing. It's fascinating. So in summation, like this video, subscribe to our channel, follow Anne-Marie. Also, follow Place Your Trades. We're putting out great Twitter content, and come back next Friday and see if Pax and I wear the same thing again. We might.
Also, don't forget, everybody, please click the link below and sign up to get your free app and start to practice on it. Get the app today, and there's a link below in the chat that Anthony provided. So please click that. Like and subscribe, and we'll see you all next week. Have a great weekend. Don't ruin your weekend by trying to do too much today. Capital Preservation Friday reigns. I'll see you. Hey, have a great weekend. Have fun with your friends. I'll see you all next
Pax.
week.
Happy Friday.
God bless and God be with all of you. Thank you. Happy Friday, kid.